Good Tuesday evening to all my friends in North America. Probably Europe is already early Wednesday, and over in Asia, it's late morning. All right. The reason I brought up Europe is I have on here my Patreon just for anybody that cares. I'm starting to build exclusive content. And what I mean by exclusive is a little bit more deeper dive, exactly what I own, when I buy and sell something. Um, I'm centering it around precious metals and miners, but based on what people ask for or want, I'll also include some income funds. So that's going I was very surprised. I got on a lot of I've been rushing to get a lot of content. So now I've got considerable content. The beauty with Patreon, people, I always knew of it, but never used it much. So I didn't really know the limits and what you can do. While you can upload videos, it's not as friendly as YouTube in that regard, but they have a lot where you can just make a post, or I can put a picture or an image or a chart or something and write context around it. So I love that it's variable. Okay. And then it's a paid service. There is a free option where you can sign up for 7 days. I have 3 tiers. Look, not a sales pitch at all, guys. Just I think in this precious metals commodity sector, it's going to be extremely explosive, right? I said we're probably in the bottom of the second inning from a sports analogy. It's going to continue to run and run pretty strongly, with or without the stock market. I prefer the stock market do good because but either way, it's going to outpace the S&P 500 for the next number of years. So does that mean the S&P 500 does its normal and this is just significantly better? Does the S&P 500 go down and this sector outperforms it that way? So I'm hopeful of both because, 20% of my portfolio is in the income funds. I love them. I built up a lot of expertise around that. Enjoy it. Kind of hoping that we get some really good mining um, ETFs. I'm, not that pleased with Yomax's GDXY, the way they handle that. And I think you can find other underlying products. So enough on that. Done with the Patreon. Let's get out of the summary and let's jump over here to distribution. But feel free to join if you want to join. Like I said, I'm overwhelmed with how many people have. Love it. I love people that subscribe to the channel. I'm not going to drop what I'm doing on the channel. I'm going to keep doing that. And as a matter of fact, I'm going to bring some of the content after the paying subscribers over there see it and post it occasionally. But it wouldn't be fair to them that spend money for the membership to post it on the same day or the same week. I'll wait a while. And some of it's just educational and not necessarily tied to what I actually own, right? But how do you even go about building it? We all know how to build somewhat of a portfolio of income funds. I talk about contrasting styles. Which fund is better? Is weekly better than monthly? What do I look for? I always want to know that it's bullish. They're never going to capture what the underlying does, but it's income. Well, multiply that times 3 times the knowledge you need to know in the commodity sector and in precious metals in particular. It's very complex. I explain a lot of those concepts, those principles, how to go about building things. So let's jump in here. Roundhill, again, love Roundhill, love what they're doing. Again, I never fall in love. So the minute they don't do well, or they're not performing, or they change something, I'll be the first to tell you. So let's jump in. We'll do the XDTE, QDTE, RDTE, update you on XPay, although that's monthly and it's not due. And then, as you guys know, YETH and YBTC are also weekly payers now on Roundhill. They declare one day before. So it doesn't make sense for me to do a video one day on 2 things. There's just not enough content there, right? If you don't make an 8-minute video in YouTube, you're not going to get much revenue at all. It's almost negligible. Why would I spend my time when it's almost can't even monetize a really short video like that? So one day later, I give you YETH and YBTC. I say that just so somebody doesn't say, hey, they declared yesterday, right? Yeah, I know. Okay. So here we go. XDTE paid 24.249, call it 25 cents, 29% yield. Pretty consistent. Look at this. It hasn't been anything over the last 7 weeks. It's either 29% or 30%. Amazing. That's what you call consistent. In general, the index has been moving up. I'm watching very closely. Can we go on to new highs in all of the indexes, or are we going to sell off? It's so hard to know. I face the same thing when I look at the metals and miners. Seasonality says they're really good in August and September. Doesn't mean they will be good. And in the markets, you have the old saying, go away in May, right? And it isn't until, Labor Day that the big money comes back. They're on Long Island, they're doing different things, summertime with the kids, all of those things. It doesn't mean the market stops. It just means the market isn't really showing us for sure which way it's going to go. Like I said, we could melt up longer. We could go into early next year. I do have a feeling we get some kind of a pullback soon. I'm hoping it's of the 5 to 7% variety and not a serious 20 or 25% pullback. You just never know. And I stopped trying to predict the short-term moves, guys. There's a lot of people that try it, and I can analyze that data, but it's just not worth the effort. So I give you that straight up. But I tell you what I am seeing, okay? And thus the probabilities. Okay. So let's move to the next one. Look at this one on the bottom. This is over there, 400 days or so, 1836 and 1774. So in this continual move up, and even weekly, right? This fund, all three of the funds were up for the week. Whether it's a smaller amount or not, when I see green, that's positive overall, right? So let's look at the Qs. The Qs are always priced cheaper here, so their yield is higher on a smaller payment, right? You had a 24-cent payment there, you have a 23%, but look at the difference. They're in the 44 price range. This is 35 price range. Up also, right? So take that, take it every day. What the summary is what helps you understand these funds, to be honest. Looking at individual tells you something, but it doesn't tell you the longer span of time. Look at this also, 33, 35, 34, 35. Whenever you see something consistent like this, I'll say this again. Doesn't matter. If you look at a price chart and you see something is just flat, first off, if you go back and you see for 2 or 3 years it's flat, likely there's not much volume, not much really going on, not an equity that I even want to own. Well, when you start looking at index and there's a lot of volume, but when they're flat, it says it's undecisive, right? There's not that big move up, that move down. There's not fake outs, breakouts. There's a lot of, and that probably goes with it being, right, the second week of August. So this is, if people are on vacation, August is probably the biggest month that it happens. Do people step away? Certainly, right? Especially when you have families and you have kids that are involved in school, young school-age children. That's something that dictates. Um, so that draws an alarm. Whereas look here, here's a 49% payment, here's a 26% payment. All right, one is 30 cents, one is 17 cents. That's a big swing. But where are we? We're back in May, right? So it's flattening out. It isn't telling us which way it's going. We got the FOMC next month. We got everybody back in the markets, the big money in September. So we shall see. All right, RDTE. Green, light green, 23 cents, down from 26, 28.30. Yeah, that yield is off. That yield is 36%. We saw 40, 44, 46, 39. When have we had a 35? Oh, we had a 20 there. Yeah, here's the 35. So a lot of, and what I'm seeing in general when I look, the Russell hasn't been performing. What's still performing? The Mag 7, the big caps. People are still buying those. They're not out of favor yet. So you'll know when the market changes where the big money has been going, or should I say, the biggest items that people are buying. When that changes, that'll give us a signal. Again, I'm hopeful of the best, but I'm a realist also. All right, let's look. So XPay, we use this in the summary. It's not due to pay. It won't be paying until the early days of September. Okay, this is your monthly targeted S&P 500. They target this thing to be around a 20% return. We'll talk about that when we look at the summary. So speaking of that, let's look at that. All right. So what do you have? Who's performing? Who isn't performing? Well, you see the current price. You see their inception price. Two of these funds started over a year ago, guys. These are 14 months in existence now. Okay? I do bring this back to an annualized number, though, for comparison sakes. All right. That's why you see it, the dividend return is saying, hey, it's 45.73 over the full 435 days, but this is your annualized number so that you can do equal comparison. All right. So XDTE, QDTE, and RDTE, the only difference is 337, but honestly, when you're that many days, that isn't going to make a difference. At least not a huge difference. Like I've said many times in here, the first 50 days of RDTE when it launched, this thing was up like a rocket. It was killing the other two funds in total return. It was doing it in NAV increase, which was giving its gain or loss annualized a big number. Remember, when you just have a few stats, it throws off. If you didn't know any better, you never took a statistics course, you never figured out, of course, that'd be pretty hard not to know, that if you flip a coin, there's a 50% chance you get a heads and 50% chance you get tails. Well, if you just sat around and you flipped it 5 times and every time it was tails, you'd probably start thinking that there's a 90 and 95% probability to get a tail. It's not, right? So that's what happens. We start looking. I never make an assumption on a small sample size, not when I'm comparing it to something else with a large sample size, right? But that doesn't mean, let me explain to you when you talk about return to mean and other things. What happens when I look, and I made this mistake, I'll tell you guys. So when I was brand new in my 20s, that's how old I am. So they came out and they said, okay, we're doing this. I don't even know if they call it 401k, but they were incentivizing you to create a tax sheltered account, retirement account. Probably was an IRA, whatever it was. And so being math oriented and statistics, I had no practical market experience. I was like 24, 25 years old. And I bought a couple stocks, but I didn't really understand the stock market. I know math and I know statistics. And so I went out and said, well, you got to select from these funds. That's what I always hated about 401ks and well, when you get your actual money, you can do what you want. But in those early days, and even for some of you today, when you're in a company sponsored, fund, that you get a tax advantage for going out and putting the money in there, then you have to pick. If it's Fidelity managed, you have to pick. They don't allow you to pick the really risky kinds of things. So I went in and I looked at all this stuff and I said, these are mundane. I want to make big returns. And I studied and I looked and I found one that was like 85%. It was on some kind of tech in those days, right? And I looked at the 1-year track record. That's what I want. I bought that thing. It was negative for the year, like minus 8%. Well, knowing what I know now, just because something is up 75% in 1 year is sort of not predictive unless you really understand the fundamentals and everything. Then you need to know, what's the market going to do, right? Is it swimming upstream against the current? So all these kinds of narratives that I'm telling you now are sort of teaching things for you to just think about, right? Now, I'm bullish on crypto. I'm bullish on the precious metals. On crypto, I just believe in BTC. I don't know and study meme coins and all the other technologies that might drive other names there. but I understand the limitation of Bitcoin. I understand the advantages of a digital asset, right? I actually beginning to believe the story that Satoshi never existed and the CIA was behind the creation of it to create an alternative, form of wealth. And that led to it sort of being the rogue, the far out people that found it initially, the preppers, people want to get off the grid, to where it's coming back into mainstream. Whether that's true or whether that isn't really doesn't matter. It's getting accepted, it's moving along. But I also fear the full digital world where they want to control what I buy and what I spend and everything else. So it's a mixed bag. Bitcoin doesn't represent that, but the crypto technology can be used to do something like that. So just giving you a million examples of how I look at markets and how I look at things to invest in. But I am bullish on BTC. I'm obviously bullish on commodities, but there'll be a decade where I'm not at all, right? So if you were in the 70s and you were in the 2000s, okay, and I was heavy into it in the 2000s, I was all in and learning as I went. So it was the first time I really deployed all my capital into the commodity sector, energy, precious metals, and all kinds of different positions and strategies, and utilized options and got into futures pretty heavy. And then after 2011, that really wasn't the place to be. So when I say decades can be, money can be made more in a sector than another sector. And I don't just mean small caps versus large caps in stocks. I'm talking about, is it a commodity cycle? Is it a S&P 500 cycle? Now, it doesn't mean the S&P 500 can't own some of the assets in that commodity cycle, but they're slow to repopulate and go there. And gold and precious metals aren't loved by the analysts in the stock market community, because people might go out and just buy physical. That doesn't do them any good, which is not a bad way to also accumulate wealth. So enough on that. Let's get back in. But I bring this up always as teaching and bringing it back to understanding this environment. This is as volatile, almost like our politics. I've never seen it this divisive, and it doesn't spell a good opportunity in some ways, but in other ways, there is an opportunity. That's why we have increased geopolitical issues. That's why so many things, the world is very polarized right now, from those that have and those that don't have, and all kinds of things. So I don't expect it to get any better, sadly. I worry about the war cycle a lot. And that sort of ties in to the commodity cycle being in the cycle it's in. But you don't always need war to have a commodity cycle. It's just the boom and bust of commodities. But there'll be a period when they don't perform, right? If you look at the decade after 2011, 2012, the S&P and the NASDAQ and these things have been on a hell of a run. I just think that slows down a lot. There'll be particular AI, there'll be some sets of stocks and things that still perform very well, but overall the commodity cycle will be the winner. All right, enough on that. So XDTE, how do they look here? What, you guys know me. What is total return, right? To me, that tells the story. Now, if you want to say, I like this one over this one, or I'll take the 12% on Russell, I really like the small cap, they're close enough you can do that. But this targeted has risen up and coming into play. Okay, but it's not magic. It doesn't mean you get 20% no matter what happens. Okay, it's just targeted at that. The Qs have been the winner, right? It's the tech, it's the AI portion, right? The S&P, in a way, it protects you because it's broader. It's 500 stocks. But when the tech sector is moving, by the way, I saw a positive thing the other day. I've mentioned this and several times. Again, I'm going off, but I'm about to talk about YETH and YBTC from Roundhill, so it's kind of relevant. So I see a couple of things. One of the statements I made a couple days ago was I saw a day where the miners moved up, precious metal miners, and gold was flat. That was positive. I'm starting to see some signs like that. Been waiting a long time for that. Now, it doesn't mean the next 30 days we're up. We could turn around and go down. But then I said, BTC isn't performing recently. It's up near highs, but it doesn't seem like it wants to break out. And I saw days where the NASDAQ was down and BTC was down with it. So that trade should separate, right? But there's a lot of people that are really into tech that also like Bitcoin. And it really should be traded as an alternative store of wealth, as a, you know, not a US dollar and not a tech play. And sometimes so goes the stock market, so goes the NASDAQ, so goes BTC. Well, the other day I saw the markets down and I saw BTC up and gold was down. So I was like, okay, it's showing me something. It's hanging in there. So both those asset classes, gold, precious metals, miners, and BTC miners as well. I like that aspect, right? I see it for a number of years playing out. General equities, I'm not so sure, right? Again, as I said, whatever they do, these other asset classes will do much better on an average. All right. So that's what we have. Let's jump into ETH. You guys that are really into ETH, I'm not that much. I should study it a little more. Ethereum. Um, I see it as an alternative. It's a bigger alternative play than meme coins and this and that people that are really into the sector would know, just like I am on miners. I can talk about explorers and developers and go as deep as you want to go and at that level. So it appears to me, I'm not even looking at the chart at the moment, that, again, asset classes, that's why you don't go all in at any segment, right? If you went all in here because you're a crypto lover, you're not, look at where you are. You bought it at 52, you're at 29. Okay, you gotten $23 for the first time now in a long time. Okay, you actually have earned more income than your NAV loss, right? You've been paid $23.19 if you bought it since inception, and you've only lost $23.12, so you're 7 cents up, right? But what I look at, and I want to get into the charts and somebody's really into it, what are the fundamentals, why is it moving? But I just say simply, it's gone from 51 to a low of 24.41 here. What's it done since then? 24.50, 25, 27, 27, 26, 29. That's an uptrend. Now, is this a big, long uptrend? I imagine it depends on BTC to some degree, but that's a positive change. But if I went all in here, I'm mad I don't have any capital to go. So how you deploy your capital and how you buy things and how that's, but some things I don't like. I'll take that to another extent. What do the yield max and the management teams of the funds tell you, the income fund? Oh, you got to drip. Well, of course they want you to drip. Why do they want you to drip? Because you're buying more shares. You're spending more money with them. The more money you spend, the more money they make, right? I'm not saying it's a bad strategy, okay? But if you just use that in a broad sense and you go out and drip on every stock you're in, okay? If you were dripping back here, yeah, you were adding more shares here. Yeah, and eventually if you dripped all the time, but I don't just buy it. I'd rather pick a few good ones. And you know what that's called? That's called press. When you're gambling, you press your bet. I don't do that a lot, right? I'm not saying it's bad, but let's say I buy a stock and it's $5 and it moves to 10. I go, yeah, baby, way to go. That's good, right? Now it's 12. Like, oh man, this thing's going to 100. So I throw a bunch more capital in there. What happens if it goes back to 5? So there's nothing wrong with averaging down if you understand the story and you know what you own and you really understand, and you say the market is misjudging it, and the market does misjudge things at times. Okay. Just like here, for those of you in the know, if I knew more and studied here a little bit, I could tell you absolutely, this is still a cheap price and I'm going to go all in, but it's not my interest. You know, we can only know so many things. Okay. So hopefully this stuff's helping you. Let's look at a summary up here. So 9/9/2024, right? That'd be 338 days. What's that? 27 short of a year. You got a total run of 6.77. You can earn 5% in a treasury bill. So I'm not saying don't do it. I'm just saying that's what happens in assets. Look, in my Patreon, people say, well, is this the time to build my portfolio? I would say yes, from a length of time. Over the next year or two or three, you're going to do very, very well if you build a precious metal portfolio. But I can't tell you that today is the perfect day. You could buy today and build your entire portfolio. Okay. I'll tell you how to allocate. I'll tell you what percentage to put in this type of asset, because the risk varies all over the place, and build something less risky, but can offer you a fantastic upside. But when you do that, you take the risk of next month. You know, I've had people where I've recommended them, friends have said, hey, go out and buy this miner. They bought it. A month later, it's up 35%. So they go, oh man, this is going to be great. They triple their investment. Guess what? 2 months later, they're back to break even. And they're like, what's going on, Bruce? It's volatile. It's the nature, right? Get right, set tight. If you're in the sector, you're in the area, and you understand what you have, but leave some powder, leave your ability to to buy on pullbacks, right? It's just money management. And that knack and that skill comes to you usually with age and experience. It doesn't have to be age. If you start at 15 as a kid, or $10 because your granddad or your father was really into stocks and you've learned, I've known people like that. It was like, oh my gosh, that 23-year-old knows what it took me to get to be 38, right? They may have had the same time in the market and really good teachers and mentors are good. That's what I try to do with you guys. I try and tell you as much as I can when I'm thinking about it. So you guys go, I can't watch that video. Just tell me what the dividends were. I don't care about all that other crap. Well, fast forward. All right. That other crap is going to make you rich or poor. It's up to you if you want to listen. All right. YBTC. All right, so on this one, I could have compared a few YETH funds. I didn't. So what did they pay here? 34 cents, right? Up, I like it, green here. And green here, 238 it was up, okay? So what's YB? And by the way, guys, I left something on here. I was comparing YBTC somewhere else in a shorter period of time. And so I had two numbers down here. I had the total for the 300 days, and then I had a subset that I was using in a YBTC comparing to another fund. And what happened, I was pointing to this one. So probably on the last update, I was showing you a total return of like 52%. It's not. So I fixed that today. Oh my gosh, right? I mean, it just stands out. So YBTC, the weekly payer, all these other guys are monthly payers from what I can tell. I like BITO. I own some BITO. I own YBTC, right? I used to own YBIT, hate YBIT. I wouldn't buy it with somebody gave me the money and said, I'll give it to you. I just don't like it. I don't like how they manage the fund. I've said that before. I own Ulti. I own GDXY. I don't love GDXY, but right now it's about the only minor income fund. But I play a lot more in the indexes and the 2Xs and 3Xs and sell options and do a lot of strategies that, so the GDXY thing is just, play money, just so I can report on it and understand it. Okay, so YBIT's pulling up the rear here. Why? They're the best payer other than YBTC. And look, everybody is at the same date and time. So YieldMax has never had a problem paying, although I got to where they weren't paying what I thought they should pay when I was tracking it daily, and that pissed me off. So I got out of Coney and I got out of Pulte. I got out of Misty for a different reason, not because they weren't paying, because MST wasn't performing. Therefore, Misty wasn't performing. It was having more NAV erosion. Why, BTC was up near an all-time high and Misty was near an all-time low. I don't like that combination. It shouldn't be. Okay. So look here on their NAV, minus 21. Not what I want to see when everybody else is not experiencing that. So they got it. That's not a, I mean, somebody could argue. Here's the arguments I love. Well, Bruce, I bought it since inception. I'm up 38.23. That's a lot better than treasuries and anything else I own. Great. I'm happy that you're happy. But you could be doing a lot better. Oh, really? Yeah, you could be in YBTC and almost triple that and get paid weekly. What's that worth to you, right? You wait a month to get paid. Now you're getting paid every week. So you have use of that money. And what I find is when that's really starting to take off and those high payments are coming, you got to wait a month sometime. You know right away you want to press your bet, you want to put more in because the run's starting to happen. Now you see the dividend yield coming out in a week. So I don't always press, but if I do want to press, now I got the signal I need. And I saw that on Pulte. I know Palantir very, very well. And I own the underlying. So I know exactly what it's doing. So when they don't pay at yield max, it pisses me off. And I take my money somewhere else. I did the same thing on Coney. The COI fund, COIW, and PLTW, just awesome. Instant reaction. They got leverage as well. So they're going to go higher in the bull run. I can get out of it if I choose to. What did I do on PLTY even? I saw it run crazy, even though it was only capturing 35–40% of Palantir. I said, hey, I'm doing the same thing in my Palantir. I'm putting a stop in. I can probably take $20–30 out of the price and lower my cost. It's exactly what I did. I was even able to do it in PLTY. But then when they stopped paying what I thought they should, I got out. All right, I beat a dead horse on that, guys. Sorry, but I love to give you real world examples of why I do something, not just tell you I did. I'm not here bad mouthing anyone. That behavior of Alti and that hedge fund like minutia with collars and all the things they're doing with option, as long as the stock market doesn't crash on them, that fund right now is the best fund out there in yield max. Now, you get runners, Hood is running, but guess what? I can give you a better, Hoy is not the best fund. In my opinion, HOOW, the owl, is a little better. So there's another example. But those are just funds that are running. Any income fund can do decent in an absolutely extreme bull market, but some better than others. So that's what I got. So BITO is in there, right? I think about the fact that I still own some BITO and I own YBTC. I could say, well, why don't I just put it all in here, right? Because it's monthly also. It's a small. I got 3 times the amount in YBTC that I have in BITO. But I really know BITO. I've owned it for over, 2 years. BTCI doing very well, right? I give it, and then look at the underlying. But look here, you have to have leverage to beat the underlying. You can't beat the underlying in an income fund if you don't have leverage. All right, guys, that's what I got for you. Sorry. Hopefully today's rant, sometimes I really just rant and jump around, but I think today's rant touched, I was trying to really on educational, pure educational, no emotion. All right, guys, this is Bruce with Targeted Wealth Creation. If you're interested, go out to Patreon. If you're not, no issue. Love all of my audience. Please like and subscribe. Tell your friends about the channel in general. Let's keep it going. I'm enjoying it, guys. All right, bye for now. This is not financial advice, and I'm not a financial advisor. Bye.